So at the end of last month, some new proposed Social Security legislation came out. We're not talking about a little tweak here or a little tweak there. This is a major update, major change, major proposals, and it's supported, co-sponsored by almost 200 individuals. So it's a big deal, and it's not been signed into law, but it's kind of in the process of going that direction and going through the House. It's proposed by the Democrats, and so because the House is controlled by the Democrats, that's kind of one thing that so major Social Security change looks like it has the possibility of coming. At the end of January, there was a proposed bill called Social Security 2100 Act. And it's not been signed into law, but it is kind of moving in that direction. I thought it would be interesting to look at some of the big changes that they're proposing, just so that you can understand what this bill is about. Certainly, if it does pass, there probably will be updates and changes, considering the fact that the House is controlled by one portion of Congress and the Senate another. So I imagine that there will be, if it does even pass, significant changes. So this is the article that I was reading. It was last week, and it's from retirement.tips, which is a good site and I enjoy. And so let's talk a little bit about this proposal, some of the major issues. It's proposed by Representative John Larson. And let's look at some of the proposals. So there's some things that would be helpful and improve Social Security, and then there's the funding of it. Where does this come from? And primarily it's in regard to tax increases. So they're going to reevaluate the actual formula that's used on the highest 35 years of income to produce a Social Security benefit. And by updating that, it would give all Social Security beneficiaries a automatic 2% increase in the way that they're calculating it. That's number one. Now, I think the biggest piece of this that is huge in regard to planning, in regard to the benefit to the recipient, is they're looking at increasing the threshold of income that you can make from all of the different sources of income that you make before your Social Security gets taxed. So right now, you've got to be below $32,000 of income in order to not have any of your Social Security benefits taxed. So they're looking at increasing that so that married, filing jointly individuals could have up to $100,000 of income and not have their Social Security benefits taxed. That's huge, and if that were to be the case, there's a lot of awesome planning opportunities to get retirees even more money, especially if their Social Security benefits are being taxed right now. They're going to look at adjusting the way that the cost of living annual adjustment is calculated in terms of the amount that it might be by taking the CPI U, which is what they use for urban workers, and changing it to what's called a CPI E, which has been being tracked for a number of years, which they think is a closer representation of the actual increases that retirees experience, especially in regard to things like medical costs or energy or utilities or things of that nature. Some of the things that the CPI-U doesn't really track and doesn't really capture actual increases in expenses. So they're looking at adjusting which actual measure they use for calculating increases. They're looking at giving a minimum threshold benefit, regardless of your highest 35 years of work income. They're looking at a minimum benefit that would be 25% above the poverty line. Now, how's all this going to be paid for? So the increase in taxes is going to be related to both an increase in the level of income that is subject to Social Security tax, and then secondly, the actual percentage of Social Security tax. So the wage base that Social Security is subject to taxation right now, for example, in 2019 is $132,900. Above that income, they don't withhold Social Security taxes. But what they're proposing is instead ratcheting that up all the way up to $400,000, so that if you make up to $400,000, they're going to take Social Security taxes from that income, not just cap it at the $139,000. So that's huge in terms of the tax liability that would be on employees. And a self-employed person, if you think about it, a self-employed person making $400,000, they would be paying about $50,000 more in taxes a year, just based upon that change alone. And then we look at the percentage of Social Security taxes is normally 6.2% for the employee, 6.2% for the employer. They're looking at increasing that over time up to, I think it's 7.4%. So this is really going to be driven, the increase in benefits is really going to be driven by an increase in taxes. So that's not everything that they're going to propose looking at or doing, but I think those are the highlights. And so it's a big deal, big proposal. I'll try to keep you up to date on in terms of what's happening, what's possibly changing, and what the finalized bill, if it does pass, might actually look like.